But now it's time to bring back in Jeff and also to welcome our special guest, Greg McBride. He's a Senior Vice President and Chief Financial Analyst at Bankrate.com. And most importantly, he's a friend of the income generation. Greg, thanks so much for being back with us here on the show.
Great to be with you. Thanks so much for having me.
Greg, it's so great to see you. We haven't chatted in probably over a year on the show, but we hear all this talk today about inflation being transitory. The only thing I see transitory is our money out of our wallets is transitioning faster because the cost of everything is going up. When does this end?
Well, that's the operative question right now. Is this inflation temporary, as we often see in the early stages post-recession, as an economy starts to rebound? You often see these bursts of inflation. Or is it something that's going to be longer lasting? The fact is, we're not going to know for many months as to whether the definitive answer to that question. There are risk factors in play that could make this a more sustained increase. And I think the reality of it is inflation is probably, even once the dust settles, inflation is still going to be increasing at a rate higher than what we had grown accustomed to over the last decade. The last decade, inflation couldn't get above the 2% mark. I think over the coming 5 years or so, I think more in the 2.5% range is going to be the new normal we'll have to get used to.
Well, that's interesting. The Fed has thrown everything, including the kitchen sink. Their policies are completely overdone in terms of the financial stimulus, and that's what's exacerbating this massive move in goods and services and also asset inflation as we speak. And so I kind of see this, Greg, as maybe ending up like the tulip craze, where everything just got to be so expensive, all of a sudden demand just stopped and then prices fell. And that's what I think they mean by transitory. Do you think that's correct?
Well, I think we are seeing some tulip-like manias in some areas of the markets. But as pertains to inflation, we are seeing a burst now. Some of that is due to what's called the base effect. In other words, this time a year ago, price levels were declining. So when you look at it on a year-over-year basis, it looks like a much bigger increase. When you look at it relative to 2 years ago, all of a sudden it's not as unsettling. You've got a lot of pent-up demand. There are a lot of supply chain constraints. Those are the type of things that will work their way through. And that's why I said it's going to be a number of months before we really get a true read. Inflation numbers are going to be a bit unsettling for the next few months. I think it's once the dust settles on a lot of this stimulus, then what do we see? That's going to be more telling in terms of what the trend is going forward.
Well, I don't even think the Fed cares about the inflationary factor. I think they've got an inside bet. They're all shaking hands saying, we're going to go out there and create inflation because we were never able to do it. And so we're going to throw so much stimulus at this that we're going to make sure the economy expands rapidly. And what happens then? At some point, the party's going to end because they're going to taper. And so where do you think at some point the Fed can make a mistake and overcorrect the economy and or taper, Greg?
Well, I think right now the risk is, as you said earlier, they got all this stimulus going. Do they overheat the economy just by virtue of all the stimulus? And then there's the other side of the equation, which is when do they start dialing that stimulus back? And do they do so too quickly, or are they behind the curve? With regard to the tapering, dialing back those bond purchases, they've said to this point, they're not even thinking about it, but they are thinking about talking about it. And that's the first step. I do expect that later this year, we are going to hear something from the Fed, and it is going to cause some choppiness in markets when that happens. Now, markets love the fact that the Fed is so stimulative and that they've been keeping long-term rates low. Even a whisper that they're looking at dialing that back, that is going to lead to some volatility like we kind of been lulled to sleep and haven't seen in a few months.
Thanks so much for being here. We appreciate it. Great as usual.